There are so many ways for eligible buyers to buy a home with low down payment or even no down payment at all. We're going to talk about 16 of them. Let's get into it. I'm Dan Green with Homebuyer.com. My MLS 227-607. Our lender MLS 423-065. We are part of Novus Home Mortgage Division of Exonia Bank. You can read more about Homebuyer.com in the video's description, including our lending coverage and some very important disclaimers. Also, don't forget to hit the subscribe button. This channel is full of excellent homebuyer education, which of course is different from legal, tax, and financial advice, which you can better find somewhere else. I'm not a lawyer. This is a mortgage video. And when you're ready to check your eligibility to get your mortgage pre-approved, you can do that online in about 3 minutes for eligible buyers at homebuyer.com/fast. So this video is what we call a rundown video, a survey of your options as a first-time home buyer. It's an informational video. We put links in the description that will take you to our website where you can read more. Now, none of these options, none of the things that we highlight in this video, none of them require an eligible home buyer to make a down payment of more than 5%. And many of the loans that we'll talk about don't require any down payment at all, keeping in mind that your individual circumstance may vary. So let's do this by category. First, we'll talk about your basic mortgages, government-backed mortgages, low and no down payment loans that you can get from any mortgage lender. Then we'll go into cash grants and special programs that you can consider. And last, we'll talk about potential programs such as tax credit bills in Congress that can help you buy a home. One more thing. This is a video, and it's time-stamped as of the day it's uploaded to YouTube. Mortgage guidelines and program eligibilities, those can change. So while we'll talk about what it takes to be eligible for programs throughout the rest of this video, it's possible that the guidelines will change in time. So make sure to visit our website, find any reputable source for the most up-to-date information you can about what you're learning about here. So let's start with low and no down payment mortgages, of which there are 5 main programs. And remember, this is a rundown video. We're going to offer a few quick details on each and to remind you that there are links to each program in the description where you can read more, or if it's more your style, just ask us your questions in the comments. Option 1, HomeReady. HomeReady is not a mortgage type, it's a brand name for a home affordability program. It's one of government group Fannie Mae's several low down payment 30-year fixed rate mortgage loans. The HomeReady program lets eligible first-time buyers put 3% down with reduced mortgage insurance costs and get subsidized mortgage rates through another program known as the First-Time Homebuyer Mortgage Rate Discount. HomeReady is available to buyers with household income at or below the median household income for the area in which they're buying, and the program accepts a wide range of credit scores. The credit minimums are posted on our site, so if you're buying a home, always ask whether your mortgage can be HomeReady eligible. It is one of the best deals going. Option 2, Home Possible. Home Possible is another branded mortgage. It's a 30-year fixed rate, low down payment mortgage, but this one is from Fannie Mae cousin Freddie Mac, which is why Home Possible is almost a carbon copy of the last program we discussed just before. The biggest difference between HomeReady and Home Possible is Home Possible has a higher minimum credit score by about 40 points. So why would you use Home Possible if you need a higher credit score to qualify? Well, you probably wouldn't, except when you're buying a multi-unit home. That's a home with 2 to 4 units, because Home Possible is designed as a mortgage for low to middle income households that are also multi-generational. So that's parents, grandparents, children, cousin, all living together in one home under one roof with multiple people contributing to the monthly payments. And for scenarios like this, Freddie Mac's program, it's looser for getting approved and flexible on sources for down payments in ways that HomeReady is not. So if you're a multi-generational household buying a multi-unit home, Home Possible could be your low down payment loan. Option 3, the conventional 97. Conventional 97 is named literally. It's a conventional loan, which means it's backed by Fannie Mae or Freddie Mac, and it's for 97% of the purchase price, so conventional 97. Conventional 97 was remade in the last few years. It used to be for ultra high credit scores only. Now it's for a wider group of buyers. It becomes the catch-all low down payment loan for single unit homes, which includes your typical house, your condos, your townhomes, your row homes. Conventional 97 is 3% down. There are no maximum income levels for buyers who want to use it. And those are 3 that we've now talked about, 3 low down payment loans offered through Fannie Mae and Freddie Mac. There are other government government-backed mortgages too, of course, like option 4, the FHA loan. FHA loans are actually FHA endorsed loans because the FHA doesn't make mortgage loans, it insures them for lenders. And the FHA's insurance policy says it will approve payouts for loans with as little as 3.5% down on a home for buyers with credit scores of 580 or higher in all income types in all 50 states. But that's just what's said out loud. The FHA makes exceptions, like on credit scores. For buyers with credit scores are down to 500 or buyers with no credit score, and all of other qualifying factors can be FHA approved. HMDA data since 2018 shows FHA mortgage rates tend to run slightly higher than other loans by less than a quarter on average, and FHA mortgage insurance also tends to be higher, but that's okay. A large number of first-time buyers use FHA-backed financing because the FHA is there and it stands by its mission to increase access to safe and affordable housing. Sort of like the agency backing this next program, option 5, the USDA loan. USDA loans. They're loans backed by the U.S. Department of Agriculture. They're sometimes called rural loans, but rural in this sense is the Census Bureau's definition of rural. That's any area that's not considered urban in a pass-fail kind of way. The USDA loan lets buyers purchase homes at 100% loan to value, that's no money down, and with reduced rate interest rates and insurance, the only requirement beyond where you're buying is that your credit score is decent, doesn't have to be great, just has to be decent, and that you're buying a modest home and you're of modest means. USDA loans are usually, for eligible buyers, the most affordable of the government's home affordability mortgage lines. So if you're buying anywhere that's not a city, that can be suburbs, that can be farm towns, the boonies, give a look at USDA loans. We've got a lookup of every U.S. home and its eligibility for USDA mortgages. It's on the website at homebuyer.com. So before you buy a house, any house, check it against the map. The link for that is in the description. Option 6, the VA loan. The VA and VA loan stands for Veterans Affairs, as in the U.S. Department of. VA loans are 100% mortgages. Again, no money down. They're available exclusively to veterans of the armed services, active duty military, surviving spouses, members of the reserves and National Guards, plus a few other specialty roles as defined by the VA. VA loans can be used for any home in any state or U.S. territory for any eligible buyer at comparatively low interest rates. If you have a VA benefits available to you, look at doing a VA mortgage before your other options, because usually it is the best combination of rates, fees, and ongoing costs with no down payment required to buy your first home whatsoever. Terrific program. Let's hear it for the GI Bill that made it possible. And that is 6 off the shelf, low and no down payment, government-backed mortgage loans for first-time buyers. Next, we move into special mortgage programs that help to make homes more affordable. And this section covers cash grants, incentive programs, forgivable mortgages, starting with option 7, the National Homebuyers Fund. Now, this is the first of several grant programs available to first-time buyers. Through a nonprofit public benefit corporation, first-time buyers can get up to 5% of a home's purchase price paid out as cash, with a string attached that if you move, sell, or refinance within the next 5 years, if you cease to make this home your main residence, the grant must be paid back completely, all of it, back to the fund. Also, renters cannot apply to the NHF on their own. They can only do it through their lender. So we put a link in the description with a phone number where you can get a list of your participating mortgage companies that are in your area. Option 8, forgivable mortgages. Forgivable mortgages are exactly what they sound like, mortgages that can be forgiven, cleared out, marked as paid after the buyer meets specific conditions. They're second mortgages, subordinate liens, which means that they're for smaller amounts and most often replace the typical down payment that a home buyer would make. So for 3% or 5% of the purchase price, and when combined with a first mortgage, the main mortgage, a forgivable loan brings a first-time buyer up to 100% of their purchase price with none of their own money to the table, no cash, no down payment. Also, and noteworthy, many forgivable loans don't require buyers to make payments on them, so there's nothing due as long as you pay your main mortgage and live in your home for some number of years, and that's usually 5. Option 9, doctor loans. Doctor loans are not an actual loan type. Doctor loan is just the name that lenders use for no down payment mortgage available to doctors only. That's MDs, DDSs, osteopaths. They cater to a higher income crowd who are also good targets for related financial products like credit cards and auto loans and investments, which is why doctor loans are almost exclusively offered through retail banks, big banks that have storefronts who want your mortgage and your other financial business too. So if you have a medical degree or if you're studying for one currently, doctor loans can be a good way to buy your first home with little or no money down and a ton of cross-selling on retail bank product. Option 10, good neighbor next door. Good Neighbor Next Door is another you have to work a certain job to use this program. And here, those jobs are best categorized as neighborhood heroes: teachers, educators, firefighters, law enforcement, first responders. Through Good Neighbor Next Door, people who work in the communities that they're buying in can get their homes for half off their listing price, actually half, with a down payment of as little as $100, actually $100. And there's a caveat, and that's that only certain homes are eligible for purchase, and those homes, they must be listed for sale at HUD.gov, the government website for homes that were repossessed, so homes that were taken back as part of a foreclosure. And buyers should know that all HUD homes are sold as is, with no repairs made, and that some are in less than livable condition, but at least they're half off. HUD.gov is the site. Option 11, local down payment assistance programs, DPAs. Down payment assistance programs are programs that give down payment monies to first-time buyers of homes, and here we're talking about state and local programs, which can be tough for buyers to find because the programs at the state and local level, they tend to be run by charitable groups or by neighborhood communities, not-for-profit organizations, small housing groups within a municipal government office, none of which invest a lot in their websites. The Department of Housing and Urban Development, it keeps a running list of local programs as best as it can. That link is in the description, and it's on those pages. You'll find that they're broken down by state, by county. You'll find access to interest rate reductions, closing cost credits, local tax breaks. Many of the programs, there's no strings attached, although they will require you to use a state-approved lender. You can find that on the HUD website. Option 12, National Down Payment Assistance. We separate National Down Payment Assistance as number 12 on our list from the state and local programs because national programs are simpler to find. They're simple to get. They just kind of work. The most common form of assistance are cash grants. And those are often through platforms like the FHLB, the Federal Home Loan Banking System. And those are paid to buyers directly for making a larger down payment or to reduce their closing costs or anything else that's related to buying the first home. Now, the government only allocates so much money to its DPA program, so the money is usually first come, first serve. Ask your mortgage lender whether they participate in FHLB grant program, because not every lender does. Grants can range up to $25,000, but often they're less than that. Okay, we're in the home stretch. Let's close with Section 3, first-time homebuyer bills that are passed as legislation with Congress. And let's make clear, none of this last section should be construed as the bills have already passed, because they have not. We're discussing bills, not all bills pass into law, and bills often change on the way to becoming law. So that brings us to option 13, the $15,000 first-time homebuyer tax credit. The $15,000 first-time homebuyer tax credit is a proposed bill that gives eligible buyers up to $15,000 in federal tax credits for buying their first home. The tax credit was first introduced 2 Congresses ago in the 118th, and again in the last Congress, the 119th. And because its main sponsors are still elected and still serving, the bill could be reintroduced in this current Congress, the 120th. We have a longer video, an in-depth article on the first-time homebuyer tax credit, including its standards for qualifications. That link is in the description. Next is option 14, the DASH Act. The DASH Act is a sweeping bill for housing, 20-plus parts to it. The author calls it generational, but the part you'll want to hear is that the first-time homebuyer tax credit act, the DASH Act gives eligible buyers a $15,000 tax credit. Qualification criteria includes moving into the house as your main residence, being at least 18 years of age, buying the home in an arm's length transaction. The DASH Act is another bill that expired with the last Congress and whose main sponsor is still serving. That's Senator Ron Wyden of Oregon. So the DASH Act could resurface for buyers in this new Congress. Option 15, the $25,000 Down Payment Toward Equity Act. The Down Payment Toward Equity Act is a cash grant program for first-time buyers who are also first-generation buyers. The parents did not own a home, with 2 exceptions. 1, your parents or legal guardians lost their home to foreclosure at some point, or 2, you've ever lived in foster care. The Down Payment Toward Equity Act gives up to $25,000 to eligible buyers, which can be used for anything purchase-related. That's your down payment, your closing costs, paying for homeowners insurance, anything. It, too, was introduced in the prior Congress, and its sponsors are still in the House and the Senate. That's Senator Raphael Warnock of Georgia, Representative Maxine Waters of California's 44th District. So this is a bill we could see again. And lastly, option 16, the HELPER Act. The HELPER Act is a first-time homebuyer program that exempts teachers, firefighters, law enforcement officers, other first responders from the FHA's down payment and mortgage insurance requirements, which means homebuyers that are eligible to use the HELPER Act mortgage they can buy a home, use an FHA mortgage, and not have a down payment to make whatsoever, and have no monthly mortgage insurance payments for the life of their loan. The HELPER Act moved through the House and the Senate quickly in the last Congress. It amassed more than 170 co-sponsors from both sides of the aisle, but the program did not come up for a vote. It seems likely that we will see the HELPER Act again in this Congress, the 120th. And again, we have a full write-up on the site. You can see that link in the description. And that is the 16 programs for first-time home buyers. You can get updates when we post them about any of these programs. Subscribe to the channel, hit the bell, and you'll get notified of new posts. I'm Dan with homebuyer.com. Remember, pre-approved buyers do better. Happy home buying.